morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil, and here are the top headlines this hour. Indian markets trade flat after giving up morning gains. India VIX continues to rise. And open interest in Kerala Health and Bata India surges after traders take fresh positions in their respective futures. But oil marketing companies like Indian Oil, HPCL and BPCL are under pressure after Brent crude crosses $70 a barrel for the first time in 3 years. And Federal Bank falls as much as 5% after the bank's asset quality worsened in the third quarter. And IT stocks are the top gainers on the Sensex after Morgan Stanley upgrades the Indian IT services sector, citing they could be set for a turnaround in 2018.
All right, let's take a look as to what's happening with the markets today. Nifty may have given up its opening gains today, but still it's just holding about. So some bit of consolidation is what one is seeing in today's session. Currently, actually, Nifty trades with gains of almost 14 points. 10,755 is the level. If you could just pull up the futures as well, because it was trading at a discount last when I checked the Nifty futures. Currently, they're trading at a discount of almost 4 points at levels of 10,751. But the open interest as of now is up almost 2%. Well, we'll check with our experts if there are any sort of short positions which are being taken at these higher levels. Well, the Bank Nifty futures, which crossed the 26,000 mark for the first time yesterday, are holding that mark of 26,000. So that's one positive takeaway. And the Bank Nifty futures too seems to be trading at a discount of almost 16 points right now. And the spot is above the mark of 26,000. 26,041 is the current level where it's trading. Let's pull up the India Volatility Index, which surged almost 2% yesterday. It did surge in today's session at the opening, but right now it seemed to have cooled off. The level is around 14.2, but the concerns at these higher levels for markets has been higher India Volatility Index, and also the Nifty put call ratio has been going up. Yesterday's closing level was somewhere around 1.78. So do watch out for these two metrics. In terms of what's happening with the options data today, the 10,700 as well as the 10,800, both these strikes have been pretty active, both on the call as well as put side. We've seen some open interest addition coming up for the 10,007 as well as the 800 strike. But remember, we've seen heavy put writing coming in for the 10,600 as well as the 10,700 strike in the last 2 to 3 sessions. What are the FIs doing then? Well, they are playing this markets through the options as well as the stock futures, because if you look at the last 2 trading sessions, FIs have added over 53,000 contracts on the call long side and over 29,000 contracts on the put short side. And remember, this tells you that these are bullish positions ahead of the budget which the FIs have taken. And similar is the case with regard to the stock futures, where they've been taking a lot of long positions in the stock futures. If you look at the last 2 sessions, they've added almost 25,000 on the long side in terms of stock futures, Agam.
Well, I'm really curious about how the market reads the Nifty put call ratio currently in underneath, because we have seen it move consistently over the past couple of days. But let's address the stock futures in today's day of trade. And we have NIT Technologies right at the top of the list, which is gaining substantially in terms of open interest and CAF. In fact, we're looking at a 20% increase there, with the underlying also moving up as much as 4.2%. That's followed by PC Jeweler, and that has another 15% added in open interest. So let's pull up the list of stocks which are looking at a substantial increase in OI. There you have it. NIT Technologies, PC Jeweler, Just Dial, as well as Tata Elxsi. All of these stocks are looking at fresh longs building in with a substantial increase in open interest. ACC, of course, also advancing by as much as 1% with another 8% added in its OI. That's January futures. Let's also take a look at the list which has seen unwinding. There you have it. Capital First, which did move into the F&O band yesterday. It is looking at slight unwinding, a decline of around 3%. It's followed by Dish TV, looking at 2.5% decline in open interest. So longs unwinding is Dish TV. Jet Irrigation is looking at a little bit of short covering, though not too much to speak for when it comes to change in open interest. IFCI is the other counter, which has also moved into the F&O band yesterday, looking at slight unwinding, followed by GFC. But on the whole, a lot of activity in NIIT Technologies, followed by PC Jewelers, some of the stocks that I'll be watching out for today, Navneet.
Well, clearly, Agam, the theme for the day has to be the IT stocks, as the Nifty IT index is up almost 2.5% in today's session. Remember, Morgan Stanley has come out with its report where they have increased the target prices of a couple of these companies. stating that the valuations of IT companies are below the average valuations that one has seen in the long term. So do watch out for it. 2.7% higher. In fact, the top 5 gainers in Nifty are all IT companies: Wipro, HCL Technologies, Tech Mahindra, TCS, Infosys. All of them have seen substantial gains in today's trade. All right, then, before we get our guest on the show, here's a reminder. If you have any queries in the futures and options market, you can call us now on 022-4540-4141. You can also write to us on our social media platforms, Twitter, Facebook, with AskSpeakYou hashtag. Well, let's welcome our F&O experts for the day then. Nirav Chheda of Nirmal Bank Securities and Amit Shah of BOB Capital Markets joins us on the show now. Good morning to both of you, gentlemen, and appreciate you joining us today on Bloomberg Quinn. Amit, let me come to you first. How should one position themselves at these record high levels? You know, so far, Bank Nifty was the one which was finding it so difficult to cross the 26,000 mark, which it did yesterday. Right. Sustaining above that mark, where would your bet be, on Nifty or Bank Nifty?
So clearly, I would place my bet on Bank Nifty at these levels. The reason is Nifty is likely to see some price and time consolidation at these levels. If you see the rising trend line, it is facing some resistance around 10,750 odd mark. And the risk reward in Bank Nifty is not looking that attractive compared to Bank Nifty. If I see the open interest comparison, Nifty has gained over 31% since the start of the series. Bank Nifty has seen an increase in open interest over 100% since the inception of the January series. So to me, Bank Nifty looks more attractive at these levels, considering the risk reward play and the better alpha in the coming weeks. So even in Nifty, we see that there has been good supportive action which has formed, basically as mentioned by Navneet, that there has been strong put writing activity since the last couple of days and weeks. So 10,600, 700 at the money strike prices are witnessing some good heavy activity. Right. Yes. So that can see some positive action on the index, and we are seeing some sector rotation which is supporting the benchmark. Like Nifty, IT is now performing. We see cement sectors can outperform the market in coming days. Banking, especially the private banks, are supportive. So I clearly see that Nifty can hover around these levels with sector rotation trend happening, and outperformance can be seen in the banking space with private banks being the leader.
All right, so that's the view on the benchmarks. Nirav, good morning. How are you viewing trade on the benchmark indices? What is your view here?
It's more or less the same view. Actually, I'm also positive. I also feel Bank Nifty should now outperform. It has broken out about 26,000 levels, which is very good. If you look at the index, the Nifty levels, 1.75 on the PCR looks very bullish. It can go up to 2, but I would not be, a buyer at current levels. I would be hedging my positions if I'm a buyer. So my view would be that buy Nifty here, but hedge with a at the money put option, because you can see a big fall here, probably with the VIX also increasing with the budget coming in.
Okay, so both our experts are bullish on Bank Nifty, which so far was underperforming Nifty. Let's see if there are higher levels which can be seen on Bank Nifty after crossing that crucial mark of 26,000. Well, let's shift our focus then to the options corner. Amit Shah has a Nifty Bank protective put for the day, but before we take a look at his strategy, let's see what that exactly means. A protective put is an option strategy a trader uses when one is bullish on a security in the long term, but wary of uncertainties in the near term. Well, under this strategy, the trader buys a put of the underlying security to guard against the drop in the price of the security. Amit, over to you. Take us through your protective put strategy.
Yes, so if you see, the option premiums are quite decently priced. It's almost at the money options, you are getting a close to 1% premium, which ideally is around 2% at the of the strike price cost. So I feel the premium is quite reasonable, rather than keeping a stop loss of 25,800, 25,750, which I believe is a good support level of Bank Nifty. The more it sustains above these levels, the momentum can continue on the higher side. So rather than holding on to that higher end stop loss, the premiums, the option is available quite cheaply. So I would recommend to buy a future level at these levels and protect your long position by buying at the money put option of 26,000 strike price with a decent premium of 180, 185.
Right. So you're suggesting go long on Bank Nifty futures and simultaneously buy the 26,000 put to protect that long position,
Correct.
right?
Correct.
Okay.
Right. Well, of course, Nirav has a long straddle. So again, before we go across to Nirav for his strategy, let's see what it means. So a long straddle is when one buys an at-the-money call and put in anticipation of increase in volatility, and when volatility increases, this is followed by an expansion in option premiums, the strategy becomes profitable. So Nirav, now that I've defined what a long straddle is, if you can take us through your calls and puts and the strike that you intend to employ the strategy.
Yeah, I would like to buy the 10,750 call and put. The combined premium comes to around 140 points, which is not much. It's just about 1.5%. See, again, I feel Nifty is going to move around 200, 250 points from here, either direction. So that will be profitable. You can keep a stop loss of 50 points. So when the combined premium which you are buying at is 140, when that comes down to about 90 points, that is when you exit the positions, or when that rally comes up to 240 points, that is your target, so you should be booking your profits there.
Okay, so those are a couple of the option strategies from our experts. Let's shift focus to the stock futures and check which are the stock futures which are buzzing in today's session. As we've highlighted, the top 5 gainers today are Nifty are your IT stocks after that upgrade has come from Morgan Stanley. So look at stocks like Wipro, TCS, HCL, Tech Mahindra, Infosys. These are your large cap counters. But other than that, we've seen stocks like NIT Technologies and Tata Elxsi too doing well in the past few sessions. I mean, if I can come to you, if somebody were to take a bet on one IT stock right now, which one would that be?
So I've in my list, I've already recommended Tata Elxsi. I have been quite bullish on this counter. Even in our show, I've recommended around 950 odd levels. The stock is now hovering around 1060, 1065. If you see the open interest also today, it has spiked up by 8-9% closely. So I believe it's a pure someone who is looking for a trading as well as a positional bet. Tata Elxsi is a very good counter. It is one can buy with a stop loss of 1040 odd and look for 1120, 1150.
You know what? This is one stock. This is an ongoing call with a lot of our experts have been giving on our show. What I want to check is there a turnaround when it comes to stocks like Infi, TCS, which I believe now are trading at fresh 52-week high?
Yeah, so if you see TCS and Infosys, both are looking quite strong. This amount of volume activity both have witnessed over the last couple of weeks has been quite phenomenal. So I think TCS can outperform Infosys over a medium-term perspective. It is hovering around its all-time high of around 2850 odd. And it's, I think, matter of time once it starts sustaining on a closing basis about 2850, the stock can see another 7 to 8% up move from these levels.
Right. I must say that, there wasn't anything spectacular which came out of the earnings for TCS and Infosys, but I suppose it's the underlying factors and the outlook from the management that's
there was no negative surprise, I'll say.
Yes, there were no negative surprises.
Because in every quarter there is some negative surprise which you get to see. The growth was pretty muted for both.
Absolutely, yes.
But I guess there was no negative surprise.
Right.
And as Morgan Stanley in its report has stated, the valuations now are pretty, call them cheap or whatever, but if you look at the long-term valuations, it's trading below that average of long-term valuations. So probably it just makes an investment case at these levels.
Well, they certainly seem reasonable, as they have been for a few months, but I reckon this is certainly, to a certain extent, got to do with the management committee. But we'll move on and we'll address, a stock from the consumption space. So I do want to pick up on what PC Jeweler is doing right now. The stock is just moved up as much as 1%, but we are looking at a traction in its open interest. So its open interest has increased by as much as 15% right now. Currently trading at around 594. Nirav, what's your call on PC Jeweler? What would you do with this stock? Avoid, buy, sell?
Yeah. See, in PC Jeweler, if you look at the volume only in the last 2 to 3 months, the last 2-3 months volume has actually covered the last whole year's volume of PC Jeweler. So that is a big positive. From the last week itself, it has been witnessing a lot of open interest built up on the long side. I would be a buyer even at current levels. I expect this stock to now go up towards 650 odd levels. It has broken out above 568, 570, which was a resistance area, its previous top also. So now one can be buying with a stop loss of 570 for a target of about 650.
Okay, that's the view on PC Jewelers. Nirav suggests you can buy at these levels. And remember, this counter has been pretty active. It's up today for the 10th straight session. So that's good going for the PC Jewelers. Let's pull up the futures of Just Style. That too is active in today's session. Just Style underlying at least it's trading with gains of almost 2.5 to 3% as of now. The futures will tell you 3.5% actually, just I'll spot, and 13% higher with regard to the January futures in terms of open interest. Amit, would you take a fresh bet, or let's say if not, if somebody had taken a long position, is it the right time to book profits?
Firstly, I would take a fresh bet even in this levels. The stock has formed a very good double bottom formation around 350 odd levels, and it is nearing its breakout level of 620, 630, which is currently trading at. So I think the more it sustains at these levels, the stock is poised for a good up move towards 800 levels over a period of 1 to 2 months. So definitely a good bet, and someone who is holding the position can definitely ride on at these levels as well.
All right, so that's the view on Just Dial. Of course, Just Dial has also been going from strength to strength, and again, we have a lot of experts recommending longs on Just Dial. Where we're going to shift to queries, and we'll take the first one, which comes from Dheeraj Kumar, who holds 2 lots of generation from the December series at 118, and he wants to know if he should hold or sell. Well, his entry point is at 118 from the December series, which means he's rolled it over. It's currently trading at 143, which means he's making a substantial amount of profits right now. Amit, I'll come back to you on this one. No, not too much change right now. What should he do? Should he hold or book profits?
So my view is positive on just Jain irrigation. Though the stock is in ban period, it on and off comes on the ban period and moves out. But someone who is holding at 118 level, I would suggest that he should revise the stop loss to 132 and ride on for upside. On a weekly basis, if it closes above 134, 136, I think the stock can potentially head towards 156 levels on the upside.
Okay, so that's a bullish view on Jain irrigation, and as Amit highlighted, the stock has been in the ban period for a while now. Our next query for the day comes from Tanmay Jadhav, who's bought Motherson Sumi 380 January call strike at a premium of 12.3. He wants to know what he should do, because the current premium of the 380 call strike of Motherson Sumi is hovering around the mark of 10. Nirav, I'll come to you. Do you think he should book his losses or hold on to his position?
See, if I look at Motherson Sumi, 375 is a very good support, and the trend is positive. So I would hold on to my positions at least till Friday. If the price doesn't come, he should be exiting his call positions on Friday and buy a future. I think it can go up towards 410 levels. Even the call strike of 380 should again move to 22 odd levels. So that is where he should be booking his profits.
All right, guys, before I can take more, viewer queries, I'm just going to go across to our experts and take their strategies. So, Amit, you have spoken about your call on Tata Elxsi, but you also have a call on Ultratech Cement. If you could take us through that as well.
So, if you see yesterday, the overall cement space has seen a very good spike in volume, especially the delivery volumes.
Right.
And if you see Grasim, Ultratech, India Cement, all these counters are approaching towards its fresh high on a breakout level. So out of the entire lot, I prefer Ultratech Cement. The stock has been consolidated over last couple of months in the band of 44 to 3800 levels. And now it is poised for a strong breakout. So from current levels, the risk reward looks attractive. On the downside, 44.30 would be a good stop loss, and on the upside, one can expect target of 47.50 to 4800 levels.
Right.
What about Ramco Cements? That too is up in today's session.
Yes. So as I said, that entire cement space, I am bullish. So Ramco also has formed a very good flag formation. So I think the risk reward over there, its stop loss could be at 780 levels, and once it starts sustaining above 820, one can look for 860 to 880 levels on the upside.
All right.
Okay, so long calls from Amit, one on Ultratech futures and the other one on Tata Elxsi futures for the day. Nirav, over to you. You too have one cement counter, and that's ACC.
The cement pack as a whole has witnessed a lot of open interest built up on the long side, and all cement stocks are actually good. Just from that perspective, I've picked ACC because I feel it still has a lot of upside left. It can go up towards 1900, 1950 odd levels. So this is where you buy ACC with a stop loss of 1805 and a target of about 1900. The second one is a buy on HUL. HUL has been moving in a higher top, higher bottom formation. A very very classical pattern. Also, from your good open interest built up has been seen. So I believe it can go up towards 1420, 1450 odd levels, which is your target. So you can buy with a stop loss of about 1360.
All right, so those are the views from Nirav, and well, he has a long on ACC as well as a long on HUL. We'll be watching out for that. But with that, I'd like to thank both our experts, Nirav as well as Amit, for joining us and taking us through their views on the show. But we will move on to a special segment, and that is the scoops that we have on Bloomberg Quint. So we have Apollo Pipes, the stock price, which has nearly doubled over the last 1 year, and the polymer pipe manufacturer has 2 plants in Uttar Pradesh, and its singular focus on just one type of product seems to be paying the dividend. So we have Darshan Mehta here with us to give the scoop on that stock. Here is it.
Yeah, so the stock that we've selected today in Stock Scoop is Apollo Pipes. A lot of HNIs and funds have actually accumulated. Even yesterday, you saw that a fund like Canada HSBC bought in close to 2% stake. So what makes this company special? What's working for it? So we'll talk about it. First of all, what the company does, it's a manufacturer of CPVC, PVC, and HDPE pipes and fittings. So basically, that's what it does. The current capacity is 53,000 MTPA. And what the projection that the management has indicated is 1 lakh MTPA by FY19. So there is significant amount of capacity expansion that is happening. So basically, this company was earlier called Amulya Leasing and Finance, wherein all the block deals had happened. Amulya Leasing Finance was the holding company of Apollo Pipes. Now, by a scheme of arrangement, there was a reverse merger that happened into Apollo Pipes, and that is why now the company that trades is a standalone Apollo Pipes company. The swap ratio was 100 shares of Apollo Pipes, and you would getting 538 shares in Amulya Leasing. So this was the swap ratio that was there. So in terms of the entire scheme of arrangement, the promoters had to sell in 18 lakh shares in Amulya Leasing, so that in the combined entity their shareholding will come down to 70%, and the investors to which this 18 lakh shares were sold: Fidelity, Mukul Agarwal, Vallabh Bansali's family, Ajay Relan. So a lot of well-known investors and funds have gotten into the company. Now, this is how it was. Pre-merger, Amulya Leasing and Finance was the listed entity in which promoters held 35% and the public held 64%. And Apollo Pipes, the promoter, held 50%, and the balance 50% was held by Amulya Leasing and Finance. Now, post-merger and the swap ratio of 538 is to 100. The shareholding changes. Now, the promoter owns almost 70% stake in the company, and the public owns 29% stake in the company, because promoter had to sell off almost 18 lakh shares in the company to those HNIs that we listed just recently. Now, in terms of look at the financials of the company, the sales has moved up from levels of 149 crores in FY14 right up to 239 crores by FY17. Their margins have improved from 8% right up to 13%. But there seems to be a little bit of trouble. 138 crores of top line in the first half, and look at the margins. It's come down to almost 9%. So I spoke to the management, and they said that first quarter was heavily impacted by GST expenditure, and the second quarter is a seasonally weak quarter for them, and that is something that impacted the financials, but they expect this to improve going ahead. As far as the entire debt situation is concerned, look at the debt situation. From a debt of 25 crores, they did their capex, went up to 45 crores, now up to just down to 19 crores. So debt equity at 0.3, very, very manageable. So there's no issue as far as the debt is concerned. The other factors that you need to watch out for Apollo Pipes is the financial picture. Return on equity 25%, return on capital 30%, and return on assets of 15%. So extremely strong return ratios by the company. Now, how does this manage against the peer group that it has? Look at the valuations. On an EV to EBITDA basis on FY17, in line with what the street is there, Astral Poly is expensive, 36 times, 25 times for Apollo Pipes, and it's in line with Supreme Industries. Finolex is the cheapest, 13 times. Because of the run-up that has happened, the P ratio has gone up to over 50 times, close to 50 times, because the fact that numbers have come down and the stock has rallied significantly. The other factors, what is working for the company, it's a pure play on polymer business. It has a focused approach to aid cost efficiencies. The next one is the shift to organized sector because of GST will aid, and in PVC pipes there is significant amount of technical know-how which the unorganized will not have. Irrigation and housing scheme of the government will focus, and they're focusing on the high margin products that will aid margins for the company going ahead. One more thing I want to point out, that this is the sister concern of APL Apollo Tubes, which is which does not have any common products, but they are complementary products. So the retail distribution of APL Apollo Tubes will be used when they increase their capacity to 100,000 MTPA, and that is something that will benefit. What is the management saying? They're doubling their capacity by FY19. Look at this. The revenue CAGR they expect in the next 2 years is 45% versus a 4-year average of 19% when the capacity kicks in, and focus on B2C segment to help improve margins for the company. No doubt, with all the positive, there are some risks. There is rising competition. There are a lot of unorganized players yet, and valuations have run up significantly. So valuations, they need to start delivering numbers so that, you know, the valuations again start becoming attractive. But no doubt, a lot of HNIs have actually bought into the company, and this is what this company does.
All right, Darshan, thanks a lot for bringing all those details with regard to Apollo Pipes, a counter which has risen about 100% as Darshan highlighted for us. Well, with that, it's a wrap on this edition of the F&O Show. Thanks very much for watching it. Stay tuned to Bloomberg. When coming up next is IPO Adda.